What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 18th of 2018. Well, folks, it's time for a daily update here on the DataDash channel. But before we dive into the update, I just want to start off by saying that I hope you all had a wonderful St. Patrick's Day yesterday for those of you who celebrate it. I hope you guys got to take some time off, spend it with family, friends, and those that you love. But speaking of love, I can tell you guys, and you probably don't need me to tell you this, there's obviously no love in crypto markets right now. We've obviously been seeing some downside price action, and I've gotten many messages and requests from those of you in the community to cover the topic of markets and really kind of share my rationale on things, where I'm standing on crypto markets, as well as my current strategy that's in play. So we're going to be talking about all of that in the daily update, but along with that as well, we have some interesting headlines. First and foremost, the well-known exchange that saw a recent $500 million hack, CoinCheck, has cut out anonymity-focused coins like Monero and Dash. So we're going to be spending some time to talk about those throughout the video. But along with that as well, a secretive Wall Street firm, as the headlines are putting it out, known as Jane Street, which trades trillions of dollars of assets each year, has announced secretly through an anonymous source that they are trading Bitcoin and other cryptocurrencies. So we'll be spending some time talking about this as we go throughout the video. Lots of interesting stuff going on, so let's not push it off any longer and dive into the update. So first and foremost, I really want to kind of settle in the tone here, guys. I think, again, for those of you who have been checking the prices, you don't need me to tell you this, but markets are obviously in the red, and to a pretty serious degree. We not only have a lot of the top 100 generally in heavy red levels here on the sell side, but we also have some protocols like Neo and Neem and Ontology, Qtum, and a lot of other big market players like Icon seeing double-digit downside action from 20% to 15% to 10%. It's some serious sell-side action here. We can't push it off. Now, the one thing I really want to settle in is because many people, when they see this, they want to try to rationalize it. They try to understand as to why this is happening. There's a headline that I found that's the reason for the sell-side action. Or it's empty Gox, or there's ban talks, or there's regulation coming in from the SEC or something like that, some governmental body. So many people try to pinpoint why things are happening in the market. And I can tell you guys, I've tried to figure out why this is happening. I've looked around and looked at a variety of different sources. But to be fair with you all, there is no direct correlation or catalyst in my eyes that's caused this. It might just be the continued correction we've seen since back in January. So because of this, I want you all to kind of keep a rational mindset in the sense of fundamentals. We haven't seen any serious fundamental changes. There really hasn't been. There hasn't been any serious bans. There hasn't been any serious regulatory talks. And the only talks that have come out have been relatively positive. And because of this, I think we need to kind of level the playing field in regards to our approach to these crypto markets in a sense of fundamentals, and understand that this is generally a correction. This happens in markets, and it's probably gone on a little bit more than some of us thought. I think a lot of us were trapped in the December mindset. We were trapped in that mindset that things would happen within a month. They'd go up in a month, and then they'd go down in a month, and it would be over. Well, it's a little bit different, guys. We have to understand that a correction is going to come through, and it might happen a little bit longer than we would have expected originally. But I do want to spend some time to talk on a positive note here, because as a trader, I can tell you guys, I'm not getting fearful right now. I'm not getting caught up in the red side action of crypto markets. In fact, I'm getting quite optimistic. There's a few different indicators that are pointing that to me. Well, first and foremost, I want to bring some rationale in regards to overall market capitalization. In fact, right now we're sitting around $277 billion, which is practically where we were back in February. So we're not at levels we haven't seen before. This is relatively close to where we were back in the peak of panic back in February. So not completely scared here, guys. We're holding generally around that same price range. So don't want to get extremely irrational here and get fearful. Along with that as well, if we take a look back at altcoins as well, this is excluding Bitcoin and market cap, we're still well over double the valuation we were at back in October and November. So just another interesting thing to keep in mind here, guys. Again, coming back up here and taking a look at overall valuations, we're still well above where we were back in November, as well as a good part of December. So because of that as well, I just want to keep a level-headed approach here, guys, but really focus in on what's gotten me very, very optimistic here, and that is market dominance. Now, you guys know I talk about this a lot on the channel because it really helps us understand the swaying cycle between Bitcoin and altcoins. Well, as you all know, my thesis is that over time we are going to see lower and lower peaks on the cycles of the Bitcoin dominance as we see more and more altcoins coming to market, as well as we see more potential behind the development of projects in the altcoin space. And even though there's a lot of junk in it, there's a lot of really good projects as well that bring technological innovation as well as increased scalability and other features that Bitcoin just simply can't provide. So, as we take it here to the yearly, we can see that over the past year, Bitcoin's dominance has decreased over time. It's shown resilience, but over time has continued to test down towards lower levels. Well, as of recent, with all the recent sell-off we've seen Bitcoin dominance take a nice little spike here, all the way up to 45%. Well, for those of you who've been watching my daily updates, you know that my target has been generally for Bitcoin to peak around 45% to 50%. That's a little bit of a range there. It gives some leeway for Bitcoin to continue gaining dominance. And really the only reason it's gaining dominance is because it's not selling off faster than altcoins are. So, because of this kind of rapid pickup in pace here, guys, we're starting to hit towards, I think, the parabolic peak of this recent Bitcoin rise and dominance. And I think with other coins, all these other altcoins in the space, taking a nice nosedive over the past few days, as well as a nice sell-off and correction over the past few months, we have a lot of great opportunities in the market. Now, many of you out there might look around the market and everything and think, well, hold on, Nick, don't we need a catalyst for Bitcoin to raise valuations in the market? We need new money to enter into the market. In the long-term cycle of things, yes, we do. We need that still. We're waiting for the Bitcoin ETF to come out this year. We're waiting for positive SEC news in regards to talks for an ETF or other financial instruments. Really, I can't think of any outside of an ETF that would allow institutional money to finally start having a piece of the action in regards to Bitcoin and other cryptocurrencies. So we're still waiting for that for the longer term cycle of things to really see parabolic price action. But I have to tell you all, if we see Bitcoin hold support around 6,000 or in this lower range, if we start to see Bitcoin dominance peak out around the higher end of 45% to 50%, this is where we could see some altcoins start to take some upside action. Now again, I don't want to get overly eager here, but we can start to see, for example, Ethereum has collapsed through the support level we were looking for here. The sell side action has really gone to an exponential level to the downside. So we're starting to see players get a lot more cheap than where they were back a few days ago. XRP BTC down here to around 73,000 Satoshis, getting close to the 200-day. We'll have to see if it gains support here. We can also see, for example, Bitcoin Cash still holding below the wedge, as well as Litecoin still holding along all-time highs. So the market leaders haven't moved drastically outside of really Ethereum. But the main thing I want to, kind of point in here, and we're going to take a look at some other players in the market to really drill this in, is that some players are still overextended in this market. I think many of you might agree, for example, when I take a look at Ripple and Litecoin and a lot of other players, they're still massively up comparative to where they were in December. Now, as much as that is an important thing to note, and I think that you've still got some correction in players, for example, I hate to, bring this bad memory up for a lot of people, but things like Tron, for example, I'm actually going to bring up an exchange here so you can see more of the price action. Players like Tron, for example, that are still massively up from where they were in December, and many would argue fundamentally don't probably belong at these levels. And this is billions of dollars of valuation, folks, that still could get sliced off. But what I really want to drill here is that even though there are still a lot of overextended players in the market, it's okay because if we're keeping on that consistency of 45 to 50% market dominance, we're understanding that over time, these altcoins are going to hold more of their valuation, more of them rather than a lot of the smaller kind of high risk projects in the small cap space. Most of the well-formed coins in the top 100 are going to retain a lot of their valuation due to new innovation, new positivity in regards to the fundamentals behind those projects. And because of that, they'll hold higher price levels compared to Bitcoin as Bitcoin dominance decreases over time. Okay. So this isn't a talk of whether or not Bitcoin is going to shoot up faster than altcoins, any specific altcoin that is. But in general, I think what we're going to see here is what we've been seeing for the past few months. We've been seeing a general rise in other coins expanding over time. And we're starting to see other coins come back down to the peak that they were at back in July. Again, we're sitting right now around 17.8%, and the peak was generally around 15%. So, could we see other coins continue to climb? Could this be where we see the next altcoin cycle and where we see people taking a little bit more of a greedy position, getting a little bit more excited about markets? We're going to tell you guys there's a lot of opportunities here. Cardano, again, approaching 1,300 Satoshis, which is where I've told you guys, if we get an opportunity at 1,300 Satoshis at Cardano, you know I'm going to be adding to that position for the long term. Again, fundamental good projects. Icon as well. Testing towards the 1,000 to 2,000 Satoshi range, generally where it opened up on exchange. If I get an opportunity down here, you guys know I'm going to be adding, because again, we're buying when there's blood in the streets. We're buying when there's fear. When really right now, there's nothing fundamentally to be worried about, but people are getting panic selling. They're panic selling in regards to all of the other sell-side action. It's almost a self-fulfilling prophecy in that sense. So you have a lot of really cheap players here. And though you have some that are overextended still and need to correct, that leaves a lot of room for these players that are oversold and have solid good fundamentals to move to the upside. So again, that's the major philosophy I'm really pushing here, guys, is to look for projects that are fundamentally undervalued in this market to hopefully pan out for the next few weeks or months, or maybe the next month or two, to where we could see an altcoin cycle, where we could start to see this Bitcoin dominance drop back below again, because I have a feeling, guys, we're not going to go back up to the 60% range where we were last time, just like how we didn't go back up to 85% when Bitcoin started to regain dominance. So that's my main philosophy here, guys. I don't know if it's going to happen today, tomorrow, next week, or over this month, but I will tell you guys, we're getting into a position where fundamentally in the sense of price, we can start to get a little bit more greedy, at least in my opinion. But I'd like to hear what you all think about this. I think that we're at a position where we can start to get a little bit more excited, a little more bullish on the market. And so long as Bitcoin comes down and holds around $6,000, I think we're going to be well positioned. If we don't even touch below there and start to move up, that would be interesting as well. But I think we will eventually come down and touch $6,000. So again, love to hear what you guys think down in the comments. That's my rationale in a too long did not read summary. I'm getting more greedy. I'm picking more altcoin positions. I'm thinking that a lot of the good fundamental positions I find will outpace Bitcoin and will be more beneficial and increase my Bitcoin comparative. So not getting too caught up on Bitcoin's price, more focusing on increasing that Bitcoin comparative in my portfolio. So guys, going on into the headlines here, first and foremost, I want to spend some time talking about CoinCheck. So we all know CoinCheck from the recent meme hack, or the famed cryptocurrency new economy movement. There was basically one of the largest exchange hacks in history, with NEEM being over I think it was $534 million worth of NEEM getting hacked from the exchange. And because of this, yes, 534, I can't believe I guessed that. The 534 million NEEM that were hacked from the exchange has served as a very big burden for CoinCheck. And because of that as well, they've recently made the decision, according to Cointelegraph Japan, that as of March 17th, they're working towards delisting Monero, Dash, and Zcash. Now, the reason they're removing these is because these are anonymity-focused cryptocurrencies. Monero, specifically for anonymity, you have Dash, which does have features like private SYN, for example, that can mask transactions, as well as Zcash, which uses zero-knowledge proofs. So you have a wide range of different privacy coins. Now, why would an exchange like CoinCheck that's recently been hacked want to get rid of anonymity coins? Well, because anonymity coins are the, I think, really the drastic solution that people would use if they were able to hack a lot of funds in regards to an exchange and they want to move it out and make it untraceable. So, for example, on a public ledger, if someone were to hack Bitcoin from an exchange and send it to a wallet, we can know the public address and sometimes be able to trace identity to it, especially if they want to take it out and cash it on some exchange. Well, in the case of something like Monero, Dash, and Zcash, some of these offer the ability to extract it from the exchange and go out and somehow, be able to keep anonymous in the process of moving it and move it towards an exchange and cash it out. So it would be untraceable. And in that regard, because of that, I think there's a serious move from exchanges, and I think this is where we're going to see decentralized exchanges really come into play with privacy coins and anonymity coins, that we're going to see a lot of these privacy-based cryptocurrencies move towards decentralized exchanges and off of centralized exchanges like Binance, like CoinCheck, like all of the others in the space. Again, that's something I've been thinking about for a while. It's a serious burden for these exchanges, guys. $440 million worth of currency being hacked from an exchange is no easy liability to meet. And I think they're taking safety measures, from at least what I can tell, to remove anything that could serve as a burden or get in the way of them being able to reclaim the funds that were hacked. So again, NEEM was not a privacy coin, guys. It's not exactly relevant towards the issue that they've previously dealt with, but I think they're taking a little bit of foresight here and seeing it as a potential issue for the future. So that's just my general take on it, guys. However, there's an interesting headline that, again, where we see more and more institutional interest in Bitcoin and other cryptocurrencies. Again, it seems like as the price has gone down, we've been seeing more and more headlines of institutional interest, surprisingly enough. Well, first and foremost, the one we're talking about today, guys, is a company known as Jane Street. They are a quantitative firm in kind of the general Wall Street space. They trade all types of different equities, such as ETFs. They trade currencies. And also in this space, they're talking about trading cryptocurrencies. So stepping outside of the traditional window of financial assets, where we still see Wall Street being generally plagued by their inner regulatory bodies of only being able to trade ETFs, we have Jane Street Capital, which trades a wide variety of things. They even trade futures contracts. But along with that as well, the main thing to take away is that they trade $13 billion daily in equities across the globe. This is a really big number for any kind of quantitative firm out there. But along with that, they've mentioned that they've included Bitcoin in the trading assets that they're trading. Now, there's no serious details as to whether or not this is generally trading Bitcoin futures or if it's directly trading the cryptocurrencies. And in fact, this is coming from an unnamed source from Business Insider, so we have to take it with a grain of salt. But I like the quote down here that Jane Street has always taken a considerable approach to trading opportunities and will continue to do so. As more cryptocurrency products emerge, we're expected to be involved. So again, you still find that limitation of generally being regulated on these big firms, these big quantitative firms and all the traditional Wall Street firms, that you have to wait. You have to wait for, unless you're a hedge fund or more kind of less regulated financial company, you have to wait for the financial instruments to come out in many cases. So again, we're still on the verge of talking about ETFs coming out. We're talking about hopefully more financial instruments like Bitcoin futures coming out for the institutional players to come in to get a piece of the action and to really start being able to funnel some of the capital they have in overvalued equities markets into crypto markets. I think that's the general trend we're going to see in 2018. It's just a matter of the regulatory bodies being exchanged in this space. So again, I'd like to hear what you guys think about it. If you guys want any more details, you're welcome to go check out Jane Street. They're, like I said, a quantitative trading firm. They trade all types of different assets in a variety of different markets. And again, could be a really good player in regards to getting some of the institutional adoption into the cryptocurrency space and getting some of that capital in there and increasing the overall liquidity that's trading in these markets. So anyways, guys, that's it for the video. Again, to summarize, keep a level head with these markets, guys. Don't panic. Again, think about it really in a fundamental sense. We haven't heard any talks of bans. MTGOX isn't selling. We have all these really positive realizations that are going on in crypto markets. And if you guys want to know, I haven't been moving anything around. I haven't been doing anything. If anything, I've been really buying into the market, buying into positions that are on discounts, and I'm waiting for that next cycle. Again, I've been here before, guys. I remember back over, I think, the fall, everyone was telling me I was crazy waiting for the next altcoin cycle. But I think we're going to see another one. And I can tell you guys from December, there's still a lot of optimism to be had on the general stance of cryptocurrencies. We're really just beginning here, guys, in my opinion. So anyways, that's it for the video. Thank you guys so much for watching. Stay smart, stay safe, and I'll see you guys in the next video. Stay tuned.